The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. This is Jessica Crejo with the Iowa Coalition for Integration and Employment and a member of your Employment First leadership team. Welcome to February's webinar, part 2 on building financial independence, financial literacy, and asset development. We're really happy to have you back this month as the part 2. Brian did such a great job in part 1. Before we get started, just a couple of housekeeping things. I want to say thank you to the Developmental Disabilities Council for their support of the Community of Practice this year. Traditionally or historically, the Community of Practice has been supported through our ODEP work, or the state's ODEP work, through the Office of Disability and Employment Policy. And this year, the DD Council is supporting the Community of Practice. So we really want to thank them for their support and ongoing investment in such a great network and opportunity for learning for all of us. Another shout out to and thank you to our captioning services. Thank you to Heather Johnson with the Center for Inclusive Design and Innovation at the Georgia Institute for Technology. She's providing our live captioning today and did in January as well. If you need captioning for the webinar, you can get that link. I put it in the chat for you. And that's called a stream text link. You just click on that. It'll bring up your live captioning, and you can kind of drag that over the top of the presentation screen here. So again, thanks to Heather. We're happy to have her and appreciate her support. I just wanted to let you know or remind you that we will be recording today's webinar. We'll be sure to share all the materials and presentation that come out of it. You can download the webinar directly there in the handouts under the control panel, usually along the right-hand side of your screen. Again, that's Brian's presentation for today, and you can download it directly. You may request a certificate of attendance or participation in today's webinar. Just shoot me an email letting me know you would like one. Hopefully everybody received their certificate from last month. And yes, just yesterday. So sorry for the timeliness on that. But if you didn't receive one and requested one from me, just shoot me an email and let me know that I missed you. So I think without further ado, I'm going to hand it over to Brian Dennis, lead for the Disability and Employment Initiative and Certified Benefits Planner, to give us another just quick overview, a little bit on something touched on in last session, and then give us a nice broad overview related to PASS and ABLE accounts. If you have any questions that come up during the webinar, just put them there in the questions or the chat, and I'll be sure to share those with Brian. And if they happen to overlap with some of the content that was shared in last webinar, no big deal. Shoot those to us as well, and Brian will try to answer them. So Brian, thanks so much, and take it away.
Awesome. Thank you, Jess. Thank you, ladies and gentlemen that are on the call. Thanks for inviting me back for another month. And again, thank you for dealing with a scheduling hiccup. I spent last week in training, which unfortunately conflicted with when we normally do the call. So thanks to everybody for being flexible and rolling with a week delay. So as Jess said, what we're going to do today is that we're going to do an overview of PASS and ABLE, which are two big work incentives for individuals to maintain their financial stability or to achieve new financial stability. So I want to stress this presentation will not make you an expert on PASS or ABLE. I'm definitely not an expert. I'm pretty good with PASS plans. ABLE, I'm still learning, but I would definitely give you an overview of both of those. If you have questions, feel free to, again, send those in the chat, including the stuff we talked about last month. If you have a question, my contact information is readily available as well. But I do want to make sure just to stress this to be a quick overview of both those programs. So there will definitely be time for questions. And if you have someone specifically, especially related to a PASS plan that you want to discuss in person, feel free to get a hold of me. We can also schedule that appointment. So first off, and also I'm fighting a cold. So if I'm hard to understand, I apologize. I hopefully won't have too many coughing fits during our time together. So as we're talking about returning to work, I always like to use the phrase more money, fewer problems. That sometimes is what people don't think about working when they receive benefits, that it's just easier not I don't have to worry about getting an overpayment. But Social Security actually, wants people to work for the stability and longevity of the program, but also it does enrich people's lives. It helps with any type of health recovery, physical, mental, emotional, all of the above. But also it helps move people out of poverty. So individuals are really trying to concentrate on maintaining their benefits, especially something like SSI. You really are relegating yourself to a life of poverty. So I really push using these work incentives to have more money in your pocket and help you move forward in your life. So just as a revamp from last time, the big question most people have about their benefits is will they lose their cash payments, their money, and will they lose their health care? Under Social Security, there are two benefits that folks get for experiencing a disability. One is the Social Security Disability Insurance Program, or SSDI. The other is SSI. And then you do have a third group of folks who receive both benefits, which is SSDI and SSI together, and those folks are called concurrent beneficiaries. So there are some folks that utilize both benefits. A quick overview, again, very quick, I want to get to PATH and ABLE, is knowing the difference between the two programs. Typically on disability, you get your benefit on the third of the month or a certain Wednesday. The amount of that benefit varies greatly depending on the beneficiary, and the insurance that comes automatically with that health care coverage is Medicare. SSI is received on the first of the month for individuals, and that has a set full amount, which is $771. So if you are a person that's on SSI in 2019, if you get a full SSI check, that amount is $771. Whether this is your first year on SSI or your 50th, you get $771. And in Iowa, if you receive SSI benefits, you get Medicaid or Title 19. Most states have that rule, but if you're dealing with folks that either are looking at moving out of the state of Iowa or they're newly to the state of Iowa, that may not have been the rule for the states that they're either going to or coming from. Remember, on disability is an all or nothing program. And what I mean by that if a person is working and they're receiving disability benefits, they will be in one of two situations. Either they will receive their full disability benefit and their paychecks together, or they will only receive their paycheck. So disability, you either get your full amount of money, let's say it's $900. If I receive $900 in disability and I go to work, every month I will either get that full $900 from disability or I'll get nothing from disability. And that really depends on my earnings. SSI works differently. SSI, your benefits ebb and flow or go up and down depending on the amount of money that you earn. So on SSI, your check isn't necessarily stopped because you go to work. It's reduced. Now, some folks have their checks reduced all the way to zero, but some folks see a few $100s taken away. This is something we can say about SSI that we cannot always say about the disability program, though. If a person receives SSI and they get and keep their job, and that's the key component, not only obtaining employment, but maintaining it, you will always have more money in your pocket. Disability is a longer conversation when it comes to that, depending on how much their disability benefit is. But with SSI, if you get and keep a job, you will always have more money in your pocket if you're on the SSI program. Last piece before we get into PATH and ABLE is resource limits. I'm sure folks on the phone are familiar with this. But generally, if you are receiving SSI benefits or receiving benefits through the Department of Human Services, there's that $2,000 rule. And this relates definitely to both PATH and ABLE. Is that $2,000 rule that if you're an individual, if you would have more than $2,000 in a bank account at the end of the month, you typically will be over-resourced for a lot of benefits through DHS, and you will be over-resourced for benefits through the SSI program. Again, PATH and ABLE are a couple of work incentives that are workarounds that limit, but it is important to understand that generally that's that rule unless you're on the MEPD program. So if you are working and receiving benefits under DHS rules, if you're on MEPD, which is Medicaid for employed persons with a disability, that resource limit, if you're considered an individual, is $12,000. If you're considered part of an eligible couple, it is $13,000. So since we kind of played catch up, here's a list of work incentives under SSI, and we're going to talk about the last two together. There's the Plan for Achieving Self-Support, usually called a PATH, and there's the Achieving a Better Life Experience account, usually called ABLE account. So this is what we're going to talk about today. So a PATH plan allows an individual to set aside incomes and or their resources for a specific period of time to achieve a vocational goal. Okay, that's really what a PATH plan is for. A PATH plan is where an individual is allowed to set aside funds and have it not counted against their benefits. Now, typically, PATH plans are utilized for individuals who receive either SSI or both benefits. You can do a PATH plan if you receive disability, but typically this is a work incentive that's usually done for folks who either receive only SSI or those concurrent beneficiaries who receive both SSI and SSDI. So what is a PATH? All right, again, typically it's used by folks who receive SSI or concurrent, and it's really used to set aside income and or resource to help a person achieve a work goal. Okay, so if you receive SSI or could qualify for it, you can set aside income and resources to pursue your goal. And that goal typically is a work goal or an educational goal. So when we talk a little bit more about PATH, I'm going to reflect on the goal a little bit more. But when you are establishing a PATH, the point is to really use it to help you with education or employment, and with the end goal of either moving off of benefits or at the very least reducing your benefits. All right. So it allows for income to be earned and saved without impacting Social Security benefits, and it's used to really grow a person's financial stability and achieve long-term goals. Okay. So you don't typically see PATH plans written for things that are going to be achieved in a month or two. These are typically longer-term goals for saving funds to use towards achieving a goal. All right, so with it, the eligibility and the payment amounts are based on income and resources after PATH plan exclusions. What that really means is this: once you get a PATH plan approved, the way Social Security will look at your resources and, more importantly, your income coming from a job will be after the impact of the PATH plan has been utilized. Okay, we'll talk about what that looks like here in a minute. All right, so PATH allows a person to set aside those money and resources, and the objective of it is to help folks either eliminate or reduce their reliance on their benefits. Okay, so the goal of the PATH isn't for you to do a PATH plan, reach your goal, and for folks to settle back where they started. All right, that may happen, but generally, if you have a person that you're looking at creating a PATH plan for, or referring to creating a PATH plan, the goal is really to reduce or eliminate the use of those benefits. All right, over a long-term period of time. All right, so it supports the stability for getting a bigger goal, and the idea is for help individuals maintain their full checks while you're doing the PATH plan. So especially for those folks that are on SSI, really the goal would be by doing a PATH plan, you really are maintaining your SSI eligibility. Okay, so you really don't see an impact of your SSI check by moving to employment. SSI is much more easily impacted by employment than disability. Reflecting back to our talk last month, on disability, you have to make a certain amount of money before Social Security really even considers impacting your benefits, and that amount for this year is $1,220. Okay, for most folks. If you're blind, it's a little bit more. But if you or a person that you're representing does not experience blindness, then that amount of money is $1,220 a month before taxes. Okay, before Social Security really looks at it impacting your disability benefits. However, if you're on the SSI program, that amount of money is significantly less. So if you receive SSI only and you go to work, the first $85 you make in a month is not counted against your benefits. If you receive SSI and disability together, it's the first $65 you make from a job. It's not counted against your benefits. So as you can see, really quickly, a person, even if working a part-time job, can have their benefits impacted if they receive SSI. While you do have more money, a lot of folks run into that issue of, I'm trying to save money to achieve a goal, and with SSI reducing my check, that's harder. The point of a PASS plan, especially receive SSI benefits, is to take that off the table and help individuals save towards longer-term goals. Here's some examples of what you can write PASS plans for. Supported employment services. So if an individual has gotten to a point where either a waiver or VR or some other funder isn't paying for their employment supports, they've graduated from some type of services and they know they need these services and they want to private pay for them, they can utilize a PASS plan to cover that. Starting a business is a fairly common PASS goal. We'll talk about that here in a minute. A lot of folks write them for education and training expenses. I'm meeting with a gentleman next week who has a PASS plan goal for that. Attendant care, especially on the work support, so maybe it's not a traditional job support, but you want to have someone come to your job to help you with some things on site. That can be definitely written to a PASS plan. Childcare, equipment and tools, uniforms, special clothing, assistive technologies, a lot of things that you can purchase that you're going to use on your work site. Doesn't mean it can only be used on your work site, but you definitely need it to help you obtain or maintain a job. Those things can be done. And probably the most common PASS requests I see are purchasing vehicles. I think this year I've written 5 or 6 PASS plans for vehicles. It's just a common thing, primarily because we live in a place in the Des Moines area where even though our public transportation has gotten better than it has been in recent years, it's still a barrier. You'll see that in lots of places, that only being able to work on at places that are either really accessible by bus can be a real barrier. A, because there's lots of places that are good quality employers that aren't on a bus route, and also not only does it need to be on a bus route, but your shift has to align with when a bus route is running. So if you have folks that work third shifts, a lot of times that can be a problem. In the Des Moines area, we often see people can get to work, but the bus isn't running when they get off work, or vice versa. It's not running when they need to go to work, but it may be running when they're getting off. Either way, if you don't have reliable transportation to get back and forth from your job, you really don't have a job. So here's some requirements of a PASS plan. First off is the goal, okay? So the goal of a PASS plan should be to have a goal that's going to reduce the reliance on your Social Security benefits. Again, the point of a PASS isn't to set aside money, but still to remain kind of where we're at long term. It's really help people move forward in their lives. It has to be specific to the goals and needs of the customer, so they're not boilerplate. It's got to be very specific to the individual, and it's got to be submitted in writing. The person that approves the PASS plans for our neck of the woods, the lady named Kate Rader, she is awesome. She is very easy to communicate with. She's very timely, very responsive in what's going on with your PASS plan. In the presentation, there's actually a link to the actual PASS form that Social Security likes to have used as far as filling out the PASS form. I believe that one is a PDF that you can do some work in and print out, but it's not savable. I do have a savable form of the PDF, so you can work. So if you are helping an individual write their PASS plan, or a person writing their own plan, that if they're kind of in progress, you can save that. So just when we get done with the call today, I will email that out to you just to make sure if anyone wants to do a PASS, they have a version that they can kind of save their progress on. And again, the plan must be approved by Social Security, so the process goes smoothly. Okay, so some folks will start the idea of a PASS plan, looks good to them, but you really need to make sure that it's approved by Kate and her to make sure they coordinate with Social Security. So if Social Security is not going to be counting resources or earnings, that everyone's really on the same page. Here's the requirements of a PASS plan. It needs a location to go. And really the goal falls into one of two categories, either getting a new job or maintaining and advancing your current position. Okay, that's really what it boils down to. Now, there's different steps in that, but PASS always has a work goal. So either moving to employment or maintaining employment and hopefully advancing in that. So that leads right back to transportation. So I may have a job when I'm creating my PASS plan to let's say, buy a vehicle. However, that job may be not as stable as it should be because of my transportation. So I would like to work more hours, but because the bus only comes by my job a couple of times a day, I can't work any type of other shift than what I currently have because that's what works for my transportation. Or it's a place that doesn't work well in the wintertime. There is no public transportation. I would like to get a better job, but now I need to get to jobs that are not on the bus route. Those are always things you can add into a path plan. It's got to have some career development stages. And what I mean by that is, what are we doing along the way to help make ourselves ready for the job? There's different things you can put in there that also can be pass eligible for expenses. So you need job training, you need post-secondary. So college or short-term training, some type of certificate. If you're going to be going through an apprenticeship, if there's any license or certifications. If any of you have ever seen the actual pass plan document, that's a question they asked me at the very beginning is, are there any type of licenses or certifications that you need to do this type of job? So someone wants to be a truck driver, they want to be a CNA, they need to have a CPR class, whatever it is. Those are things that are asked to make sure the plan works. And the plan can be written by anyone. Okay, there's no special rule about who can submit a plan, who can write a pass plan. They can be written by the customer themselves. Customers is just a term we use in my office for our participants. But these are common folks that you see to help write pass plans. So a benefits planner, a voc rehab counselor, a CRC, we get them from special ed teachers, case managers. And again, there's no hard rule. Families, friends, and obviously the person themselves can write their pass plan. Passes are less, again, if you've ever seen the document, they're not complicated as far as the question that it's asking. It's looking for good content. So you don't have to have a special degree to understand the pass form, but you do have to really make sure it's a robust document, okay, that you really are putting all the pieces to the puzzle in the pass document before you submit it to Kate. So if you have everything in there, then it more likely will get approved. So again, there's no special magic as to who can write a pass plan, but you do want to make sure that as you're creating a plan, that it's a full and workable plan. Again, the requirements is a specific time frame for reaching a goal. So you can't write a path plan for forever. Okay, you do have to put some type of time frame. And these time frames are flexible. Some folks may achieve their goals faster or take longer than others. That is absolutely fine. But when you initially are doing a path plan, you do have to give some type of time frames for you achieving your goal. Even if it's going to take a few years to achieve your goal, that part is fine. You don't have to step out how long it will take you to achieve their goal. If it's starting a business, if it's getting a degree, if it's saving for a vehicle, these are things that may take a couple years to get done. Again, these are fine. These are things that can be approved, but you can't write the end goal as being never. Okay, so that's the idea of the path plan, that you have to have those time frames, because that's how they judge if you're actually working on your plan. What are you going to do with the money needed to make the path plan a reality? So what are your goals for your income, whether it's earned or unearned? So some folks get both disability and SSI, and some of these folks may set aside maybe their disability benefits to work on their path plan. People definitely set aside money from jobs. It's the most common thing that folks set aside is their money from their job, but you can also set aside resources. So the idea of that $2,000 rule or $12,000 rule is you're getting close to a resource limit. You can set aside money that you already have saved aside. Okay, so I know I'm getting close to $2,000. What I'm going to do is I've got $1,500 in the bank. Well, if I have a path plan of paying for, let's say, my education, I'm going to set aside $1,000 already for that educational cost. Okay. That's going to drop me down to $500, but I also can set aside that money for that goal. You need to maintain records of your progress with that. Typically, past plans require you to show what you've been doing at least annually, and they can also ask for that more often. If they feel that you are not following a plan, there's a concern. But typically, at least annually, you need to show what's going on with your past plan. All right. So whatever money you said you're going to be saving aside, definitely be saving it aside. And the last part, which I try to underline to make sure that people understand that there's this part has more pieces to it, which is if you're going to be self-employed, if you're going to start a business, you need a full workable business plan to have a past plan for self-employment achieved. approved, excuse me. So if you're going to really goal is to start a business, you need to have a business plan. So if it's you, if it's someone that you know, that you work with, they're supporting, if they're going to do self-employment as part of their path plan, that's going to be part of their vocational goal, they definitely need to be developing a good, steady business plan. Here are just some potential candidates for a path plan. Again, I've kind of covered these a little bit, but just to mention again. So if you are a person who receives SSI and you've got additional income coming in, namely a job, okay, you can set aside that income to move towards a vocational goal, and that will allow you to keep your full SSI benefits. So if I have a job that's paying me $1,000 a month, that would have some significant impact on my SSI benefits. And that's not necessarily a bad thing. But if I do have a goal of starting a business, let's say, and I've got a good business plan, I could set aside $1,000 from my job as part of my path plan for my seed money. If you're on SSI, you've got extra resources. Again, you can set aside those resources. The example I gave a little bit ago of someone having $1,500, they're going to set aside $1,000. They're getting close to that $2,000 rule or $12,000 rule. If they know they're going to surpass it, let's say, you can do that when you have more money in savings that crosses any type of threshold, but because you have that path plan, that does not impact your benefits. The best time to write a path plan is, personally, if you just got a job, okay? You've had that rock star interview, maybe you got that offer of employment, you know you're going to be starting a job soon. If you really feel that that job is coming, and you know you want to set aside that money for other goals, that's a great time to set up the path plan. Okay, the path plans take a little bit of time to write up, they take a little bit of time to get approved by Kate, and then get those coordinated with Social Security. So those are things, so really the best time, pardon me, really one of the best times to do a path plan is right before that employment starts. Okay, again, I've started my job search now. I just got a job. I'm going to be starting it next week. I really want to get this path plan approved because, again, to reflect back to our training last month, SSI takes a couple months to show for your benefits to be reduced when you first start working. So in that interim, you can be working on getting that path plan that is approved, where maybe you never see your benefits reduced when you get a new job. And if you do see it reduced, maybe it's only a month or so that is reduced, and then you start getting that path plan activated. If you're going to school, training, supported employment, any type of services that you're getting that's going to help you be more self-sufficient, that this is going to be coming out of your own pocket. So I get calls from folks fairly frequently that are self-funding part of their education. So they've got a Pell Grant, maybe they get help from VR or Title I of the WIA program, but there's also some money that they're funding. It may be books, maybe having that one class, a part of a class, because they don't get enough financial aid to cover all their education, and they're making that work with their benefits, which is impressive. Those are folks should definitely create a path plan. All right, so you can set aside that money that you're using. Again, typically it's folks who maybe get enough financial assistance to cover their tuition, but they're having to pay for their books out of their own pocket. You can still be doing that, but what this allows you to do is to not have that impacted by, not have your benefits impacted, okay? And then the last one is Title II beneficiaries or SSDI folks. These are folks that, again, can set aside some income, whether it's from their job or their benefits, to do that. And typically these are done for really more expensive goals, okay? SSI versus SSDI. SSI is typically a smaller amount, a lot of times a much smaller amount of money than disability. So some folks have really robust goals, or goals take a lot of money to make happen. Those disability beneficiaries are folks that maybe path plans work better for that, because you can set aside more money if you receive those benefits. A couple other things on a path plan just for resources. Again, the path cadre for our region is Kate Rader. Kate can be contacted a variety of ways. That is her fax number, that is her physical address, and that is her phone number at the regional office. You see it says KC region pass, even though she's in Lincoln, Nebraska. Just this part of the country under Social Security is considered the Kansas City region. But she's actually located in Lincoln, Nebraska. Again, if you've ever met Kate, opportunity to talk to Kate, she is outstanding. She's really easy to ask questions of. I enjoy working with her. And the pass plan review takes 30 to 45 days, sometimes faster if she has time to get them done faster. But typically, my experience, 4, maybe 5 weeks is probably the average for her looking at a plan and getting it approved, assuming all the moving pieces are there. She typically will also give you a heads up that a pass plan has been approved, or if she has any questions about it. For those of you that are curious kind of what it looks like when a pass plan is approved, there'll be a letter sent to the individual, and also any person that the individual identifies as helping with the plan or wanting to also get CC'd on it. And the plan and the letter will be pretty straightforward and explain that the pass plan has been approved. And so you're good to go from that. Again, Kate sometimes will give a heads up phone call, but you will always get a letter. So if Jess is helping me write my pass plan and I list her as a person that assisted, it should also get copied on it. Not only will I get the letter because it's my plan, I'm the owner of it, but also any support that assisted with that plan I identify will also get the same letter. Just a few links in the presentation for you for more information. The first one talks about the elements of a pass, those things that need to be covered in there. The pass application, again, the SSA form, and I will make sure that I send out the fillable, savable form that Jessica to send out to folks, and a listing of the different pass cadres. Again, case information is in there, but if you have colleagues that live in other parts of the country, they can definitely look that up. I want to say the Kansas City region covers all of Iowa, all of Nebraska, all of Iowa, all of Missouri. And I want to say it covers western eastern Nebraska, and western Illinois. So all of Iowa, all of Missouri, portions of Nebraska, and portions of Illinois kind of fall to our region. I don't think Minnesota's in our region, but again, look at those past quadre resources. So if you have folks that live in other parts of the country, and maybe it wouldn't be Kate would be their contact, there is the contact for every past representative in the nation. All right. So I'm going to pause here and ask, before we kind of move into the ABLE account, is there any questions about the pass plan? All right, I'm not hearing anything, and I'm sure Jess would have told me if there were some questions.
Yeah, nothing coming in, but I will be happy to interrupt you when they do.
Sure. All right. So we'll cover ABLE. All right. So again, I'm not the expert on all things ABLE. ABLE's pretty new, but ABLE's really cool. So I really get excited when people want to know about ABLE accounts. So here's the information on ABLE. First off, just what an ABLE account is. So ABLE stands for Achieving Better Life Experiences. Those of us that work in human services, education, vocational services, anything that's funded by the government, they love their acronym. So ABLE is an acronym. And basically, it is a new 529A plan. Basically, if you've ever set up a 529 plan to help an individual go to college, they work very similar to that. The big thing is that an ABLE does that it allows individuals to save money for disability-related expenses. Now, this ABLE accounts, reason that a lot of people like them, including myself, is that you'll see here in a second, what is considered a disability-related expense is a really broad term, and that was done intentionally. Okay, they definitely want to make sure that the bulk of things that a person is saving for in an ABLE account qualifies to have that money spent on it. So right now, there are ABLE programs in 42 different states that are currently enrolling. And again, most of them are enrolling folks from nationwide. So you don't necessarily have to live in the state that you're establishing an ABLE account. I know some folks that live in Iowa. Iowa wasn't quite the first state to start doing ABLE accounts, so there was some going on. I know I work with a family who has had an ABLE account in North Carolina. They lived in the West Des Moines area, I want to say. So they started an account in North Carolina. They wound up moving here to Iowa once Iowa got active in taking ABLE accounts. The goal of this is that assets that are acquired in an ABLE account, as well as those things that we distribute, the money that's expended out of an ABLE account, these are not used in affecting most means-tested services. So really what that means is Department of Human Services stuff, and under Social Security, it's going to be SSI. So disability doesn't have a means test to it, so the amount of money you save in an account does not affect disability. It does affect SSI potentially, and it does obviously run into things we have through DHS, like Medicaid, like food assistance, child care, and those sorts of things. Here is the eligibility requirement. So the first thing is that a person must experience a disability before age of 26. So let me clarify that, okay? It does not mean that a person is under 26 when they're starting an ABLE account, all right? It means that medical records show documentation that the disability existed before the age of 26. So I'm 42. I just aged myself. So 26 was a long time ago for me. But if I can show my disability existed, let's say I was on disability or SSI benefits before I turned 26, then I'm eligible to do an ABLE account, all right? Not every person, though, that experiences a disability is going to be on benefits. So if my disability is not to the level of severity to qualify me for SSI or disability benefits, then I have to get a disability certification, okay? This is a statement from a medical professional that states that my disability is severe enough to meet those limitations that would normally qualify me for benefits, okay? You do not have to show the certification to start an ABLE account. However, if you are asked to demonstrate to produce it, you do need to have it. Okay, so if you do get a disability certification, that's something that you should keep in a file cabinet, in a drawer, your safe, wherever you keep your important documents, because you may be asked to produce that disability certification. If you are or you're working with someone who is on disability or SSI benefits, then being enrolled in either of those programs meets that standard. They just have to show that a disability existed before the age of 26. So qualified disability expenses are basically what you can spend money on in an ABLE account, okay? So these are things that are used for the funds of an ABLE account. As you can see down here, I have that they are broadly defined, okay? When I went through training about a year ago regarding this, and I actually met with one of the policy advisors who did this, he pointed out that this was, again, done intentionally, that the folks who wrote this legislation really wanted to make sure that those QDEs, those qualified disability expenses, are fairly broad categories. As you'll see in a moment, that they really encompass almost anything you can imagine a person utilizing. Okay. Here's a list of them. Okay. So education, housing, transportation, lots of things related to employment and training supports, assistive technology, person supports and services, health prevention and wellness. That's a really broad one as well. Things have with financial management and administrative services, legal fees, if a person's spending money on those sorts of things, funeral and burial expenses, and basic living expenses. So rent, okay, could be a qualified disability expense. When we were going through training and discussion about this, the audience threw out several examples at the presenter, and he pretty much said almost, not even almost, all of those would have been counted as a qualified disability expense, as long as you really could show that it mattered. One example came that a person needing to do some traveling for health and wellness. And again, the big point of it is that it was that as long as they explain how to help a person's health and wellness, then that most likely be considered a qualified disability expense. I'm assuming that most, yes.
Hey, since we're on that, I had a question come in. It said, may a person use funds from an ABLE account to go on a trip or vacation?
That was actually the example that came up. And the person who was running the training said yes, they could be used for that again, and that would play into that health, prevention, and wellness. I would make sure that I would probably have a statement prepared that if someone asks, how did the trip to the Bahamas help someone, it would help me out greatly. But generally, again, the gentleman that was doing the training for us actually stated that that could be used as a qualified disability expense. So again, the idea, the imagination behind it is clearly there. My 2 cents, what I would use ABLE account for kind of more standard things first. But yeah, you could potentially definitely use it for something like a vacation or a trip. Especially if there's some type of leisure or recreational piece of it. If there's supported services that go along with it. There's different things. Searchbound Adventures pops to my mind. Paying fees for that sort of thing. I definitely would be a qualified disability expense.
Right. And what about purchases of furniture? And maybe it's not indicating that they would necessarily be adaptive or universal necessarily. So maybe just furniture?
That will fall underneath the housing expense.
Okay.
So let's say you need a new bed. Then obviously that could be something that if you were using an ABLE account, you could definitely purchase a new bed. And that to me makes perfect sense. I'm a person that has a back issue. So I can tell you that when my mattress isn't quite what it's supposed to be, everything in life gets harder. So there's definitely those things that be used as part of an ABLE expense as well.
Wonderful. Okay, so not just the purchasing or getting a house or an apartment, but the making of a house could also.
Right.
Perfect.
Right. Especially if you're you can use this for a place that you are going to continue inhabiting, but also because there's been very little restrictions given on what these qualified disability expenses are. But my head would go to, let's say I'm moving. Let's say I'm moving from a group living situation to independent living, maybe from a 24-hour site to where I get hourly staff. But I may have moved from a house where it was fully furnished to an apartment that has basically the amenities that come with an apartment and nothing else. The ABLE account dollars could definitely be used to furnish your apartment. So everything from dishes to couch to whatever you need to really make your home a home, to make it livable.
Perfect. Thank you.
Yes, ma'am. Any other questions?
That's all of them.
All
right now. Thank you.
Okay. So as you can see down there, I try to put in the middle and in bold that always keep your receipts and your records. Okay, so if there's a question about where did the money go, that you can show where the funds were. A couple other things when it comes to ABLE accounts. Most ABLE accounts do not require residency. Iowa is one of those states as well. I gave the example of the first ABLE account person I worked with was a family who started an ABLE account, I want to say in North Carolina, because North Carolina beat Iowa to having active accounts. And then once Iowa started doing active accounts through iABLE, then they moved the account to the state of Iowa. You can only have one account at any given time per beneficiary, so this becomes the coordination piece. So again, for this family, they had to coordinate that they were closing the North Carolina ABLE account and transferring things to start the Iowa ABLE account. The beneficiary is always the owner of the account. With ABLE accounts, you hear a couple different terms. You hear the term of owner, and you get a term signature authority. The owner is the individual. So if it's my money, if it's things being saved for Brian, I'm the owner of the account, but I may also have a signature authority. So the signature authority is always the parent if a person is under 18. Okay, so if you're doing an ABLE account for someone that's under 18, the parent is always, or the guardian, if the parent is not involved, that person is always the signature authority for the ABLE account. Okay, if you never started a bank account for your kids, you're used to some of that those experiences. Once a person becomes 18 or older, then it can either be the guardian or the individual with power of attorney. And Social Security has been pretty clear that they really want to give the emphasis on making sure that the owner of the account has power of it. So they really have tried to be a little restricted with establishing who is the owner, who has signature authority other than the owner of an account. and guardian power of attorney are pretty much always allowed there. I've had questions with conservators, things like that, be a signature authority. Even if you go to the website for iAble or even the national website, one of the things that it says that if you have other legal connections to a person, so that may work to check with your state. Typically, states will ask to see the documents that give you some type of attachment to the individual and see if it meets signature authority standards. But generally, signature authority is either a guardian or a power of attorney. Okay, and there usually is only one signature authority on an account. So this comes up with parents sometimes, especially someone's under 18, that both are guardians, but we need to establish who's going to be the signature authority, and they kind of need to say who will it be. Will it be parent A or parent B? All right. A couple things when it comes to ABLE accounts. This is really Iowa-based stuff. So again, if you have an account, think about starting an account in another state, some of these rules may be a little different. The annual maximum across the country is $15,000. Okay, $15,000. That number actually just increased last year. It had been 14,000. Last year it moved to 15, and it's still 15 in 2019. For Iowa, the lifetime maximum limit is $420,000. Some states it's significantly less, it's $100,000. Some states it's more. But $420,000 is the lifetime maximum benefit. And there's a few things about how Iowa works. In the state of Iowa, if you establish an ABLE account, at least $25 needs to be deposited in the account to keep it active every single month. There's a maintenance fee of $45 or $60. The maintenance fee, if I remember correctly, is where you get a lower amount as if you go paperless. If you still want paper statements sent to you, it's a $60 fee. Lots of us are worried about trees. So if you go paperless, it'll be a $45 fee. If you want a debit card as part of the ABLE account, there's a $2 monthly fee for having a debit card unless you have a $250 average in the account. It's not even $250 monthly. I want to say it is $250 average in the account, but I would just look at it as keeping at least $250 in the account. You can then get a debit card that you can use for the ABLE account purchases free of charge. And remember that the Iowa ABLE account is administered by the state treasurer. Okay, that's who runs it in the state of Iowa. I don't work for the Treasury Department, so I'm just giving you information. But again, they are the ultimate authorities when it comes to ABLE accounts in Iowa. ABLE accounts, again, are disregarded in terms of Medicaid eligibility. And just a couple things for SSI folks who do ABLE. Once your ABLE account reaches a $100,000 balance, which isn't that great. I've never had $100,000 in the bank, but maybe one day. But if the person gets their ABLE account to a balance of $100,000, then the SSI cash benefits are ceased until the limit reaches under the amount of the account is under $100,000. Let me clarify that a little bit. I use the term cease and not terminate for one very good reason. Cease basically means that you're still active in Social Security, but they're just not sending you money. Okay, so if you are working with someone or you have an ABLE account yourself and your account reaches $100,000, what Social Security will then do is stop sending you your 771 or whatever your SSI amount should be. When the balance in your ABLE account drops under $100,000, those SSI payments will begin again. You are not terminated, you've not lost your Medicaid, but you just stopped getting your cash benefits while that limit, while that amount in the account is $100,000 or more. Now, the other thing is this. If you remember back to last month, we talked a little bit about when you're on SSI and you go 12 consecutive months without any SSI cash benefits, then Social Security will terminate you. If the reason that you're not getting SSI cash benefits is because you have more than $100,000 in an ABLE account, that 12-month rule does not apply to you. Okay, so I know there's a lot of moving parts with that, but just to revamp, I'm trying to make it clear. If you or someone that you're supporting has an ABLE account and they get SSI, Once that ABLE account amount reaches $100,000 or more, the SSI benefits are ceased, not terminated. The cash benefits are just basically put on pause or suspended until that balance drops under $100,000. If that time frame is over a year, that does not mean that a person gets terminated. Typically, if you're on SSI, you reach 12 straight months of no cash benefits, you're terminated. However, if the reason that they have stopped your cash benefit because the ABLE account balance, that 12 months does not apply to you. All right? So hopefully that was clear. And again, if you have someone that reaches $100,000 in ABLE account, that is fantastic. Medicaid clawback, or the payback policy, most people call it the clawback, which is basically this. If the person who receives the ABLE account is also on Medicaid, and let's say that person passes away, there is the possibility that any state's Medicaid administration system could ask for the funds that are still left in the ABLE account to be paid back to the state if there's if that to pay off the Medicaid reserve, the Medicaid expenses that they got during their lifetime. When I talked to the gentleman who did my initial training, he stated that there aren't really any states that have a good way of tracking how much Medicaid dollars a person receives, much less doing the payback. So it's less of a reality than just something that's written into the rules. Okay, so his advice was don't plan on using ABLE accounts as kind of legacy planning. So I'm going to save this money in an ABLE account, and if I pass on, it goes to my children or my family or whoever. That's not the best use of an ABLE account. But technically, if I have an ABLE account and I pass away and there's money left in that account, I can leave that account to someone, but that account is also potentially eligible for Medicaid payback, which means that they could be asked, hey, you've got 50 grand left in the account, and we know you received more than 50 grand in Medicaid benefits. We would like you to give us the 50 grand to cover the Medicaid service that you got provided. Again, it's something that exists. The likelihood of it happening, though, is really fuzzy. And the last piece of this is, again, where to go with for ABLE accounts, assistance. So it really starts online. There's the website. They have a really great FAQ, or frequently asked questions section. I did not put the national site on there, but you can Google it, and I can also just send it to Jessica. The national ABLE account site, which again has a lot of information and typically has a page dedicated to every state. So you can find out information about Iowa by going directly to the iABLE account, or if you go to the National ABLE website, there will be a map, and you just click on the state of Iowa, and it'll give you a synopsis. It won't be as detailed as the iABLE account, but it will give you just a quick synopsis snapshot, which some folks use that to do ABLE account shopping. I don't think that's a bad term, but to figure out, well, maybe you're in a situation that there is significant funds that could be contributed to a person's ABLE account, not only by themselves, but also on behalf of them by other family members or other folks that are going to be leaving them money and don't want it to impact things such as SSI or DHS funded services. You can look at different states and see again what that lifetime maximum is. That annual maximum is the same. Okay, the annual maximum is the same across the country, 15,000. But some states have higher lifetime. I was one of the highest, but some states do have a higher lifetime contributions, and some folks look at that going, someone's 18, 19 years old, and if we contribute $15,000 a year, if this person, lives to their 60s or 70s, we're going to cross that 420. So we're going to look and see those folks that maybe have those really longer, those higher amounts. Okay. That was our ABLE presentation. I've only got 5 minutes left, so I'm going to go just real quickly. Just a reminder, Ticket to Work is one of the things I also work in, is that if you're serving someone that receives benefits, you receive benefits yourself, you should really assign your ticket if you're looking at work in school. Again, the reasons for assigning the person's ticket. Some things to remember, as always, that everyone can work, maintain your benefits. You can transition off of benefits gradually. You keep your health care. Always get a receipt from Social Security. Get some type of documentation that you reported your wages, and you should assign your ticket. And just a quick way of remembering which benefits are which if you're not sure. If a person gets their check on the 1st, they receive SSI. If it's on the 3rd or a certain Wednesday, typically that's going to be disability. If the check is $771 or less, they receive SSI. If it's more than $771, it's disability. And if they get more than one check in a month, then they are concurrent beneficiaries. With that, for the 4 minutes we've got remaining, does anyone have any questions?
And just a fun fact, Brian, about ABLE accounts, I know that there are 400 open ABLE accounts in Iowa right now.
That is awesome.
Right? It's a good number.
Iowa, and just as a quick aside, I'm not so good at trivia. I don't know how many pass accounts, but I know from talking to Kate, the Kansas City region typically has some of the top amount of active pass plans, and within that region, Iowa is typically the state that leads. So ABLE and PASS are used a lot in the state of Iowa, which I think is awesome because these are really things that can really assist persons. And by the way, you can have both a PASS and an ABLE account if anyone was curious. If you have to pick one or the other, no, you can definitely do that. I will say PASS plans are finite. You have a goal where you will reach and end your PASS plan. ABLE accounts are really more long-term, lifelong type of account. So that's kind of the difference between the two.
Nice. Okay. I don't see any questions coming in, but let Brian and I share with you an opportunity related to some benefits planning training that's going to be offered across the state here. Iowa Workforce Development is partnering with Griffin Hammis Associates to provide what is called an intermediate level benefits planning training. So not the basic 101 and not the expertise level, but that right in between, that just right. The training is going to be in 3 parts, and it will include 2 webinars and 1 3-day in-person training, which will take place in Des Moines. Participation in all 3 parts is going to be required for those who register, and I can share the dates and times with you. I also put the same information that I'm reading to you now in the chat pod. So the first webinar will happen on March 5th. Second webinar will be hosted on March 19th. And then the in-person training will occur in April 16th, 17th, and 18th. And if you're interested in participating in that, and again, there is no registration fee. I don't think I mentioned that. This is free training. There is no registration fee. So if you would like to participate, you need to email Paige Easton over at Iowa Workforce Development. Again, I dropped her email there in the chat pod. But if you would like that information or information specific to this training, I'm happy to forward you the email. So just want to encourage you all to look into that, get signed up for it. And I think Brian told me that Paige would like those registration information by the end of this week, because that first webinar happens next Tuesday, March 5th. So again, free training opportunity. Yeah, go ahead, Brian.
Oh, no, pardon me for coughing in my cold, but I was just stressing that because the first webinar is next Tuesday, she is trying to get kind of a final head count by the end of this week. So again, if you have any, even if you're a strong baby, I would suggest emailing Paige and getting that information so she can feel, because there are limited seats, and we would hate for someone to try and get at the last minute, and because of that, time crunch. So again, if you have an interest, email Paige by the end of this week if at all possible.
Perfect. I cannot think of anything else besides to remind you and tell you to please come back in March. We're going to be back on March 19th for person-centered planning with Leanne Moskowitz. Now, you might say to yourself, Jess, we've done that every year. I don't know if I need to come back to that, but please come back to that because we know that every year, every month, even every day, things change, right, in our service system, and the delivery of our services. So please join us in March for that so Leanne can give us an update on kind of everything that's happening across the state and related to onboarding the new MCO. And then again, just our person-centered planning principles around employment, right, and integrated competitive employment. So I will be sure to send information out to get you registered for that. Again, we've recorded today, so I'll be sure to send out that recording link along with Brian's presentation and the benefits planning training that's coming up. If you would like that, just give me an email and I'll shoot that off to you on some more of the details on that. Otherwise, I think that wraps us up for today. Thanks again, Brian. It was great to have you kick off this year for us. Couldn't have done it better. So thank you so much.
Well, thank you. Thank you all for having me.
All right, everyone. Take care. Have a great rest of the week and stay warm. Have a nice day. Thank you, Brian.
Thank you. All right. Bye-bye.
Bye-bye.